All right, let's talk money. Forget all the chaos and confusion for a second. Today, we're going to build your financial fortress. Yep, a rock-solid plan for your money. And we're doing it from the ground up, all in the next 5 minutes. So you might be wondering, how are we going to do that? Well, we took a giant 30-hour finance course and boiled it all down, distilled it to the absolute must-know lessons. Think of this as your personal blueprint. And where does any big project start? You got it, with a foundation. Yep, every single fortress needs a solid foundation. And in your financial world, that foundation is built with two key materials: budgeting and saving. Seriously, this is the bedrock. Everything else we're going to talk about, it all rests on this. And look, let's get one thing straight about budgeting. It's not about restriction. It's not about saying no to everything you love. It's about control. It's you telling your money where to go, instead of scratching your head at the end of the month wondering where it all went. It's your map. Simple as that. So if you need a simple place to start, check out the 50-30-20 rule. It's super straightforward. 50% of your take-home pay goes to your needs, rent, groceries, the essentials. 30% is for your wants, the fun stuff, like going out or that new gadget. And that last 20%, that's the magic number. That's for savings. That's you paying your future self first. Okay, but where does that 20% go first? Great question. It goes right here. Before you even think about investing, before you save for a vacation, you build your safety net. We're talking about an emergency fund. That's 3 to 6 months of your basic living expenses tucked away. This is what protects your whole fortress when life, inevitably happens. This is probably the single most important stone in that foundation. All right, so the foundation is poured. It's solid. Now it's time to build up the walls. And in our financial fortress, those walls are your credit. Building a strong credit framework is absolutely key if you ever want to get good loans with low interest rates down the road. And that framework, it gets measured by your credit score. But look, the formula isn't some big secret. Get this, a massive chunk of your score, like 65%, boils down to just two things. Number one, paying your bills on time, every time. And number two, keeping your credit card balances low. That's it. If you can master just those two habits, you're building a fantastic financial reputation. Now, when we talk about credit and loans, it's important to know that not all debt is the same. It can be a powerful tool, or it can be a trap. Good debt is the kind that helps you build for the future, like a mortgage on a house that grows in value, or a student loan for a degree that boosts your income. But bad debt, that just makes you poor. It's for stuff that loses value the second you buy it. But then there's a type of debt that isn't just bad. It's a wrecking ball aimed right at your financial fortress. I'm talking about payday loans. These things are financial traps, pure and simple. They're designed to be almost impossible to escape. Seriously, they're one of the worst, most destructive things you can ever get tangled up with. So why are they so bad? This number tells the whole story. The annual percentage rate, the APR, can climb as high as 800%. No, that is not a typo. 800%. Your credit card might be, 20%? A payday loan can be 40 times more expensive. It's a debt spiral designed to break you. Okay, deep breath. Our fortress has its foundation. It has its walls. But what good is that without a roof to protect everything we've built from all the crazy, unpredictable storms life throws at us? Well, that's where insurance comes in. The whole point of insurance is actually pretty simple. You can't stop every bad thing from happening, right? But what you can do is stop a bad thing from becoming a financial disaster. Instead of you having to pay a huge, catastrophic bill all at once, you're basically transferring that risk to someone else, the insurance company, for a small, regular fee. And to understand any policy, you just need to know a few keywords. Your premium, that's just your regular payment. kind of like a subscription. The deductible is the amount that you have to pay out of your own pocket before the insurance company starts paying. And the policy limit? Well, that's the max amount they'll ever pay for a claim. Knowing these three things is huge when you're picking the right coverage. So the fortress is built. It's protected by a solid roof. Now for the really exciting part, making what's inside that fortress grow. This is where we talk about investing. This is the engine that can take your savings and transform them into real long-term wealth. And if you only take away one single thing about investing, please let it be this. Look at Miguel and Jasmine. Miguel started investing early, but with less money each month. Jasmine waited 10 years, but then she started saving more money. So who ended up with more? Miguel, by a lot. Why? It's the magic of compound interest. It's your money making its own money. This proves without a doubt that when you start is way more important than how much you start with. Time is your superpower here. So, how do you actually use that power? Simple. You follow the plan. But look closely here. What's step one? It's not invest. Nope. Step one is create a budget. Step two is build an emergency fund. See? You absolutely have to have that solid foundation in place before you can start building upwards and growing your wealth. You can't skip the basics. And that brings our whole fortress idea full circle. You just can't skip steps. Trying to jump straight to investing without a budget, without an emergency fund, without a grip on your debt, it's like trying to build a house on a shaky, crappy foundation. It just won't work. Each piece we've talked about supports the next one. They all have to be there for your fortress to stand strong and grow for years to come. Look, building your financial security isn't a quick project. It's something you work on for life. So, the question I want to leave you with is this. Take a hard look at your own financial fortress. Is it built to last? Or are you still standing there just trying to figure out where to lay that very first stone?